Okay, let's unpack this. We are swapping out our usual charts and graphs for a location.
A very specific
It's a
locase.
location that's really defining this intersection of, lifestyle migration and rapid real estate appreciation. We're heading south of the border.
Down to Mérida, Yucatan.
Yeah. A city famous for its yellow and orange colonial architecture, its history, and, as our sources are revealing, a stunning market run that's grabbed global investor attention.
That's right. And for you, the listener, we are diving deep into a specific micro-market here. The Centro Histórico of Mérida.
The historic center.
Exactly. This isn't just a story about general growth in Mexico. This is about an intense, very specific economic squeeze that has just driven prices through the roof over a compressed 3-year window, roughly 2022 to 2025.
So our mission today is pretty clear. We need to move past the headlines and really understand the core mechanics. We want to identify the exact forces, the buyer profiles, the unique property traits, and of course the limited supply dynamics that are fueling this surge.
It's all about understanding why the value is accumulating so quickly.
And what that signals for other, comparable markets globally. Here's where it gets really interesting.
It really does.
So let's start with the velocity, the sheer speed of it all. When we look at that period, 2022 to the present, what are the core data points that stand out? Because the average annual appreciation alone is enough to make any property owner, well, sit up straight.
The growth trajectory is remarkable. I mean, generally speaking, the market for used homes across all of Mérida has been incredibly robust.
And not just in Centro.
Not just in Centro, no. We're seeing average annual price increases consistently falling somewhere between 10 and 15%.
And that's year over year.
Year over year. This isn't some flash-in-the-pan number. This is compounded growth, even during periods of, global economic uncertainty.
And 10 to 15% annual growth, compounded, that changes the entire investment profile of a market in a huge hurry.
It does.
But what really grabbed our attention in the sources was what happens when you isolate that data, when you look specifically at the Centro Histórico.
That's where the story of scarcity just kicks in hard. If we look at the cumulative gain for properties right in the historic core over that 3-year time frame, 2022 through 2025, it is, well, it's truly staggering.
Staggering is the right word.
For many of these well-located, desirable colonial properties, we're talking about a total appreciation in the range of 30 to 45%.
30 to 45% in 3 years. That's massive. And it just begs the question, why? Why this specific velocity during this specific window?
Well, did the pandemic trigger it?
You have to think so. An acceleration of that lifestyle migration that just concentrated demand right in the historic heart of the city.
Absolutely. The sources strongly suggest that acceleration was the catalyst. Look, Mérida was already on the radar for its cultural appeal, but 2022 was the inflection point.
Right.
The stability of the peso relative to the U.S. dollar made properties look like a bargain, and then you have the sudden acceptance of permanent remote work.
Especially among North American and European professionals.
Precisely. They could suddenly live the colonial dream they'd previously only imagined for retirement.
So that combination of lifestyle choice, remote income, and favorable exchange rates just poured this immense kind of price-insensitive demand directly into Centro.
It was a perfect storm.
Now, before we move on, we have to acknowledge a point you raised from the sources about the data itself.
Yes.
When we're talking about appreciation rates in the 30 to 45% range, we have to be transparent that securing a single unified government time series chart for every single barrio in Centro is, well, it's nearly impossible.
That's a critical point for you, the listener here. This is not like looking up the S&P 500 index.
Not at all.
When we reference these trends, we're relying on a robust synthesis of multiple specialized real estate reports, local broker listing data, and confirmed closing prices.
So it's about the consistency across all those different sources.
The consistency is what validates the trend. We might not have the official government stamp on the percentage, but the market narrative, the consistent upward trajectory of asking and closing prices is overwhelmingly clear.
So the trend is undeniable, which leads us to the core structural question. Why the Centro Histórico?
Yeah.
If the whole city of Mérida is growing, why are the historic center and these inner city neighborhoods so dramatically outperforming the new modern developments on the outskirts?
This is crucial for understanding the market's fundamental attraction and the concept of non-replicable value.
What do you mean by that?
Reports focused on Mérida consistently show that the historic core isn't just appreciated, it's experiencing premium appreciation.
A premium.
Yes, because it offers something that simply cannot be replicated anywhere else in the city, no matter how much money you spend on new construction.
Okay, give us those specifics. What are the key appeal factors that these buyer demographics are paying a massive premium for?
The sources highlight three main interconnected factors. First and foremost is walkability. This means living in a place where your primary mode of transportation is your feet. You are steps away from the main plazas like the Plaza Grande or Santa Lucia. You have access to authentic markets, cultural events, cafes. You don't need a car.
I can imagine that ease of living is a huge draw, especially for people migrating from sprawling North American cities.
Oh, absolutely.
You're swapping a 30-minute car commute for a 3-minute stroll to get your morning coffee.
Precisely. And that ties directly into the second factor, the tourism infrastructure.
Okay.
That walkability, those beautiful colonial facades, it all supports a thriving short-term rental market. A central property isn't just a home.
It's an asset.
It's an immediate, high-performing income-generating asset.
Mm.
That dual utility, personal use and income, that fuels investor demand significantly.
Okay, so walkability, tourism, and the third factor.
The specific buyer appeal. The Centro Historico disproportionately attracts international buyers and remote workers. North America, of course, but increasingly from Europe as well.
And they're looking for something specific.
They are looking for cultural immersion and historical character, which a new build 20 minutes outside the Periférico Ring Road simply cannot offer. They are buying the experience of the colonial past, not just the square footage.
So we've established that this unique historic character, the scarcity of the experience itself, is translating directly into higher economic value.
It is.
Which brings us to the engine room of this price surge. The dynamic between demand and that fixed supply. Let's break down the demand side first. Who exactly is in this buyer pool? What are their motivations?
The demand side is this powerful, multi-layered force. You basically have three primary groups sustaining the high prices. First, national buyers.
So buyers from within Mexico?
Yes. High net worth Mexicans who recognize the stability and cultural value of these historic assets. They are looking for long-term holds for generational wealth preservation.
That sounds like a pretty stable foundational demand base.
It is. The second group is the high-velocity demand, international lifestyle migrants and expats.
These are the remote workers.
The remote workers or retirees from North America and Europe. They're buying for immediate use. And critically, their purchasing power, often backed by U.S. or Canadian dollars, makes them less sensitive to local price increases.
So if the dollar is strong, a price jump in pesos doesn't feel as big.
Exactly. Sometimes the exchange rate just absorbs it.
And the third layer, the pure investors.
Yes, the dedicated rental income investors. These are distinct from the lifestyle buyers. They're focused purely on capitalizing on the strong tourism and short-term rental market. They view a colonial home as a business.
So they want something turnkey.
They want something already renovated and ready to generate income instantly. This creates a relentless cyclical pressure on prices.
You're describing a three-pronged demand attack: local stability, international wealth, and focused income generation, all hitting one very specific location.
And that location is defined by its hard cap on inventory.
That's the supply constraint, isn't it?
It is the ultimate bottleneck. The supply of genuine, architecturally significant colonial properties in Centro Historico is naturally capped. It's protected by historic preservation laws.
And even if it weren't?
Even if it weren't, you cannot artificially recreate 200 years of architectural history. It's impossible.
So the specific demand for a colonial home with, the high ceilings, the pasta tiles, the inner patios, that specific inventory is finite.
That's the key.
Even if Mérida builds thousands of new homes next year, none of them will satisfy that core demand for an authentic central property.
Exactly. And because the supply is fixed and the demand is relentless and diverse, even a modest increase in the number of buyers translates directly and rapidly into significant price increases. You see this phenomenon in very few markets globally.
Where a fundamental physical and regulatory constraint just limits the market's ability to adjust.
That's right.
This dynamic leads us into what I think is the most nuanced insight of our entire deep dive: the property condition premium.
Wow.
The appreciation rates are not uniform, not even within the Centro. There's a dramatic distinction based on whether the property is turnkey or if it's a major fixer-upper.
This is perhaps the most important detail for anyone looking at this market as an investment. The market has fundamentally split.
Split how?
The risk profile of renovating a historic home has become so high in terms of cost, time, dealing with specialized permits, labor, that the market is aggressively paying a premium just to avoid that uncertainty.
Let's look at the two ends of that spectrum. Which property type has seen the most aggressive appreciation since 2022?
That title belongs squarely to the fully restored homes.
No question.
No question. These are the properties, the renovated colonials, the well-located high-end townhomes that are literally ready to move into or rent out tomorrow. They command the premium prices, and they're also demonstrating the strongest appreciation trajectory. They're the ones pushing toward the upper limits of that 45% cumulative gain we talked about.
I can see why. If you're a foreign buyer managing a multi-year complex renovation in a different country, a different language,
Especially dealing with historic codes.
it sounds daunting.
It is. And the sources point out that the cost of specialized labor and imported finishes for quality colonial restoration has surged right alongside the property values.
Right.
Renovating a 19th century colonial home is not the same as putting up drywall in a modern condo. You need structural engineers who understand historic masonry. You need artisans for specific details, specialized materials.
So if the cost of renovation has skyrocketed, that inherently makes the fully restored property more valuable by comparison?
Exactly.
What about the other side, the basic fixers, those beautiful but, derelict colonial shells that still need a ton of work?
Those properties have absolutely seen positive price gains. Of course they have. They're tied to the underlying land and historic scarcity.
But not at the same pace.
Not even close. Their appreciation has been far more moderate. They are not growing at the pace of the turnkey properties. The market is aggressively valuing time saved and risk averted. It's telling buyers, we will pay a massive increasing premium for an asset that is ready for immediate income or occupancy.
That's a critical insight for you, the listener. The true scarcity isn't just the colonial building, but the finished, usable colonial building.
That's the perfect way to put it.
It suggests that if you can absorb that renovation risk successfully, there is still profit to be made, but the premium for that risk avoidance is just growing exponentially.
Precisely. And that preference for immediate gratification leads to our final section, the market outlook. After this tremendous surge, that 30 to 45% cumulative return in 3 years, analysts have to ask, what happens next? Will this growth rate continue indefinitely?
I think we can assume the answer is no. I mean, no market can sustain 10 to 15% year-over-year growth forever without some sort of correction or normalization. So what's the consensus now?
The consensus is a necessary tempering of expectations. We're moving toward a more sustainable growth model. Several factors are pushing this.
Such as?
As we mentioned, rising construction and renovation costs are making new projects more expensive. This, coupled with general inflationary pressures across Mexico, is pushing up the theoretical replacement value of any property.
So inflation is setting a higher floor for prices, but maybe also dampening that rapid speculative spike.
That is the balance. The high cost of labor and materials means the properties cannot become dramatically cheaper unless there's a massive economic contraction, which is not predicted.
Okay.
However, the sheer cost of entry has now become so high that analysts expect the frantic pace of 2022-2025 to slow down.
So the market is maturing after a boom. It's not a crash prediction, but a show in pace.
Correct. Market analysts following Mérida expect continued appreciation. Absolutely. The underlying fundamentals that limited historic inventory, the cultural appeal, ongoing foreign demand, they remain incredibly strong.
But the rate of appreciation will slow.
But the appreciation is expected to be at a slightly slower, more stable, and sustainable pace moving forward. The steep curve is flattening into a firm upward trend.
That makes perfect sense. We've charted the dramatic growth metrics where certain central properties appreciated 30 to 45% cumulatively over 3 years.
A huge run.
We identified that powerful push and pull of supply and demand, with affluent global investment meeting an unyielding constraint on colonial inventory. And perhaps most importantly, we highlighted that growing critical performance difference where fully restored homes are demanding a substantial and increasing premium over the basic fixers.
The story of Mérida Centro Histórico serves as a clear, fascinating case study. It shows how cities that possess these finite, highly desirable historic and cultural assets become global economic magnets.
Especially when powerful macro trends hit.
Right, like remote work and international lifestyle migration. They suddenly open up accessibility to a wealthier global audience. This is really the blueprint for a high-performing international heritage market.
It truly is a remarkable blend of culture and commerce. And that leaves us with a final provocative thought for you to chew on.
Huh.
If the supply of colonial properties is fundamentally fixed and demand remains sustained by these powerful global factors, the expats, the investors, the remote workers, how high can that replacement value inside the Centro be pushed
Before what happens?
before the appreciation shifts entirely to the properties just outside the strictly defined historic zone?
Think about the periphery. If Centro becomes unaffordable for even high-end buyers, where is the next logical spillover area that can offer even a fraction of that historic charm?
And beyond that,
Furthermore, what other cities around the world share this precise combination of limited, culturally significant historic supply and rising international lifestyle interest? That is the real connection for you to explore as you process this deep dive.